Hey everybody, Chuck Barone here. Wednesday, August the 17th, 2022. Welcome to the show. We're really glad you're here. As always, I want to start by thanking everybody for their support for the channel and the videos. You guys' support means the world to us. Interesting day today, but nothing earth-shattering, guys. So today's video going to be a nice, short, sweet one. Today's stock market was down. Actually, today pretty much everything was down except oil. Stock market had a down day. It looked like it was really started to tank. But then when the Fed released their minutes, market had a little bit of a rally. I guess the stock market is seeing in those Fed minutes that the Fed probably is not, they believe the Fed isn't going to be tightening as much as was thought. So the stock market rallied up toward the end of the day to trim its losses pretty nicely. Now the bond market had a different interpretation of it today because the bond market had a sell-off with the 10-year settling at 2.89%. There's still a pretty significant inversion between the 2-year and 10-year with more than 40 basis points between them. The bond market is seeing recession coming and the Fed continuing to raise interest rates. Completely a little bit different interpretation than what the stock market saw in those same minutes. The dollar today was up fractionally, 106.64 on the index. The dollar's king until either the Fed creates a situation where the dollar weakens by flooding more money into the economy or slacking rates off or even starting to cut rates. And unless some foreign currency country decides to start raising interest rates to get into parity with the U.S., the dollar is going to be king for a little while right now on the index. And that's putting a little bit of pressure on commodities and some other stuff in these markets. Today, metals had a down day. Not a very good day at all for metals. Silver settling $1763.60 per ounce. Silver down, settling at $19.90 per ounce. The disappointment there is silver breaking that support line at $20. Granted, it's only 10 cents, so hopefully the silver can have a little bit of a rebound today and get back above that $20 mark. I would really like to see it bounce from here. I think if it doesn't, it's going to go down a little ways and silver owners are going to be pretty unhappy. The oil today was the only thing that was up. I guess it was due for a technical bounce here, settling at $87.91 per barrel for West Texas Intermediate. Natural gas settling at $9.20, down about 1.75%. I think a lot of that has to do with profit taking. People long on natural gas have been raking in some fabulous profits, and maybe some of these traders are taking some of that profit off the table now. Bitcoin down day today, settling at 23,379. I think Bitcoin's looking for a little bit of support here. It's not looking. At first, I thought when it broke under 24,000, it could be profit taking, but it looks like it's turning into more than that. I would like to see Bitcoin get a little bit of a bounce and just like silver, get back above that support line. I think that I think everything looks a little bit weak right now. And news you guys need to hear today, we had 2 reports come out. Consumer spending continues strong, surprisingly. People are just spending money like they have it. And of course, debt levels are rising with consumer spending. So, I don't know how enthusiastic I'm going to be about consumer spending numbers that are all debt driven. It looks like poor people are being forced to use credit to pay for the necessaries. I don't know if that's the kind of spending that really looks well on a spending report. Also, we had the housing stuff come up today. And mortgage applications fell to their lowest level since 2000. So this is a pretty big collapse here. We've been talking about real estate's going to have a big correction. I think that the snowball's starting down the hill and starting to gain speed in the real estate correction now. There's all kind of signs out there that this correction is ongoing. The number of houses listed is skyrocketing. The number of people dropping prices on listings, again, skyrocketing. The number of days on the market, which was basically everything was selling in under 1 month, is now turning into 90 days or more without even people looking at the property, let alone writing offers. The market's pretty much dried up. And I think that before we're going to have any kind of revival in real estate, like I've been saying all along, one of two things has to happen. Either rates have to come down to accommodate these higher prices so people can afford a mortgage to get in these houses, or prices have to come down so that with these higher rates, again, people can afford to get mortgages. I think that the demand is there for mortgage, although we haven't been seeing it in my office. I think the demand is there. I think people are just being shocked by the payment numbers they're seeing. Lenders are all tightening their standards now, so it's more difficult to qualify for a loan, especially a conventional loan. And people are cash strapped, guys. The down payments that are required, if you're buying a house that's $450,000, your down payment there is, even at 5%, is $22,500. It's a lot of money for young couples, young families, young people getting started out to cough up all at once for a down payment, in addition to their closing costs and all the other expenses that go along with buying a house. So real estate's starting to correct. I think that this is going to continue and start to pick up speed as it gets right. I was feeling pretty negative earlier, a couple of months ago, about where real estate might settle. I was seeing a median price here, at least in Las Vegas, of around $350,000, and with interest rates at 6%. I still feel pretty strongly like that would make this market thrive. I just am a little less certain that the market's going to drop that far. But we'll see how things pan out. This recession's just getting started. We know the typical duration of a depression, or a recession. What would Freud say there? The typical duration of a recession like this is 20 months. If the recession started in January, we still got quite a ways to go, about a year or so. So we'll see what goes with real estate. We're going to keep a very close eye on it and keep you guys posted on all the data. Now, some earnings came in today. Companies reporting pretty good earnings. Walmart, Home Depot, Lowe's, Target got smashed, but they were kind of giving away their excess inventory to prepare themselves for the holiday season coming up. I think that was a pretty good strategic move on Target that'll pay off later. But these earnings, everything's debt-driven now, and the debt bubble has to pop sooner or later. People can't just continue to add on. If their incomes aren't really rising, the idea of just continually adding on more debt, piling it higher, it can only get so high. I think we're going to start seeing bankruptcy attorneys getting very, very busy here, especially for younger couples who don't have assets like a house they own or stuff like that. I think they're just going to blow all this debt out. Some interesting stuff from across the pond in the UK today came out with their inflation numbers, and their inflation, 10.1%. So we're here in the United States, we were fortunate enough to have a little bit of a dip in our inflation. UK's is still rising rampantly. And what I saw that was interesting in the UK now is a company in the UK has just applied for a license to get and sell 50-year mortgages. 50 years with a fixed rate. Number one, what kind of crazy-ass lender wants to lend money at a fixed rate for 50 years? I mean, that's crazy in itself. But number two is, can they really get away with turning a mortgage into a generational kind of loan? 50 years. People don't pay off 30-year mortgages. What would be the percentage of people that would ever ever pay off a 50-year mortgage. And even if you take that mortgage out at a relatively young age, let's say even, 28 years old, okay, which is relatively young for a home buyer, you're going to pay that loan off when you're 78? Really? But they're calling this a way to make housing more affordable. To me, it looks just like another debt trap, another wonderful addition to the debt trap they're creating. I think that, a lot of people have the feeling that the government is behind all of this, everything that's happening bad in the world. Well, I always look to, the genius, my mentor always told me to follow the money. The money is not created by the Federal Reserve, but the real money is our corporate overlords, the billionaire class, the ultra-billionaire class, who write the laws, set all the regulations, and basically set the rules for our society these days because we don't bribe politicians anymore. Now we just lobby them. I wish I could get away with some lobbying like that. But anyway, I think they're just they want to create a society where you're basically now born into debt, and you stay and are in debt your entire life, where your earnings, the significant portion of those earnings, is nothing more than to service our corporate overlords. They're eliminating the competition through these mergers and acquisitions, so the big keep getting bigger and bigger and bigger. Now they're creating this public, which is a servant class, the word slave might be a little strong, but a debt slave for sure. And they're creating a society, you can kind of see the genesis of it here, where these few own everything and all of it, and everybody else just pays these few for the right to live, to breathe, to have a car and a house and to eat. It's just Bananasville, what we're seeing in this country right now. Now, on the other hand, of course, luxury sales, fancy cars, Teslas, fancy clothes and jewelry and all that stuff's rocking and rolling. Earning for luxury goods up like crazy, no slump there in sales. It's the stuff that's the bottom end stuff, food, vegetables, butter, cream cheese. I mean, have you seen I hate to sound like a cheapskate here, but Jesus, man. I mean, my wife typically does a lot of the shopping for us, but I was in the store and I'm looking at some of these prices. You get this little tiny package for twice as much as the normal size package used to be. It's starting to get seriously noticeable right now. Before I close, I just want to talk about the Fed minutes today, and how people are interpreting those. I guess if you look at those Fed speak reports, you can kind of read into them anything you want. I think that, in my view, the Fed minutes are showing that the Fed is worried about this inflation. I think it's more of, they're not worried about us, they're worried about themselves and how they look on the job. I think we're going to see for sure that half-point increase coming up in September. I think that it could even go as high as 3/4, depending on how the inflation numbers come in next month. I think they're going to continue to raise rates through this year at least. So I think we might have for the common working guy like me, like most of my audience, it's going to be a sad ho-ho-ho this year, guys. I don't think that this is going to be the big whoop-de-doo Christmas. I don't think our economy is going to be doing well by the end of the year. I think people are going to be understanding the situation we're in. So I hope that you have been taking our advice and doing the things we've been saying on the channel and in these videos over and over and over. And I'm going to say them one more time today. Save your money. Save as much as you possibly can. 10%, try to set your baseline at 10%. Most people can save that and still maintain their lifestyle if they look for a little bit of here and there to make cuts on. You start saving your money now, living within your means, you're going to be glad you did. It's a great habit to have. It's a great way to live your life with a feeling of plenty. And it eliminates waste and stuff that You might be wasting money and not even really realizing it because it just gets to be a habit after a little while. Save your money. Put together your war chest. We're talking about $25,000 emergency fund, FU fund, screw you boss fund, whatever you want to call it, to have just in case something goes wrong in your life. You'll have this money to know you can get through this crisis without going upside down into debt bigly. Second thing we've been talking about is to invest your money conservatively. Right now, look to be more of a value investor than a growth investor. Look for dividend-paying stocks. Be conservative with the way you're spending your money. Be thoughtful with it. If you can possibly do it, start to trim down any debt you might have, excluding your mortgage. But if you can pay that down or off, all the better. A debt-free lifestyle is the goal. It's going to be a much happier, easier life for you. You might have to take a little bit more time before you buy that car, okay? If you're going to pay cash for it, then have a big payment. But there's nothing like owning everything free and clear, having it to yourself without having to deal with a monthly writing of a check to keep it. But these Fed, I digress a little bit, getting back to the Fed minutes, I think that the jury's in, guys. This recession is on. This inflation is real. We might see some moderation here where it's not these shocking numbers of over 9 or even over 10 like our friends in England are suffering with right now. But it's going to be elevated. It's going to be far, far above the Fed target number of 2%. So rate increases are going to continue. Sooner or later, those increases are going to have to weigh on this stock market. If you invest your money conservatively, there's no reason to get out of the market, but to have that money set aside and in a conservative investment where if the poop does hit the fan in the market, you're probably going to be okay. Anyway, guys, that's it for the day. We really appreciate you spending your time watching the videos. If you like what you're hearing here and you appreciate what we're doing, hit the like button, share the videos with your friends, your subscribers. If you haven't already subscribed, don't forget to click the bell to make sure you get our notifications. Also, don't forget, if you have questions you'd like me to answer, ask Chuck Barone at gmail.com. I look forward to answering your questions. In the meantime, guys, till we talk again tomorrow, big reports coming out tomorrow. Have a great day. Thanks.